When it comes to retiring in Singapore, most people think about our national CPF system. However, today, we will be discussing a less talked about but equally important topic, which is the Supplementary Retirement Scheme, or SRS for short. Started in 2001, the SRS is a voluntary initiative that's part of Singapore's multi-pronged strategy to help citizens, PRs, and foreigners build up their retirement nest egg. This scheme can provide additional income to enhance our retirement lifestyle. And joining me today for this discussion is Dinesh Dayani from our editorial team.
Happy to be here.
And we're also pleased to have two distinguished guests from the industry. We have Furber, Head of Client Engagement at Maybank Securities, Singapore.
Hi, thanks for inviting me on the show.
And we have Wong Ting, who is a trading representative at Maybank Securities, Singapore.
Happy to be here.
Let's start with understanding what the SRS is first. Dinesh, since you write about topics like this, can you give us a simple explanation of what the SRS is and how is it different from CPF?
The SRS is a voluntary scheme, so unlike the CPF, it's entirely voluntary, so you can contribute or not contribute whenever you want. You also don't have any commitment to continue contributing once you do so. Secondly, like you also mentioned, it's not just for Singaporeans and PRs. Foreigners can also contribute, so it's a way for foreigners to save up for their own retirement because they're not obviously on the CPF scheme. And then there's some ground rules regarding withdrawals that I think everyone needs to understand. So firstly, when you withdraw, you need to wait till your statutory retirement age, which is 63 as of this year. And it's going to go up. I think the government already announced it'll go up to 65 by 2030. So you need to understand that is when you contribute, and that statutory retirement age applies to you. Also, when you eventually do withdraw, you have to pay 50% of the tax on the withdrawals that you make. So for example, if you withdraw $40,000, you'll be taxed on $20,000 only. Right? So another example is that if you do withdraw early, there's that flexibility that you can withdraw earlier. You will incur a 5% penalty. So in that same example, you withdraw $40,000 early, you will incur like a $2,000 penalty. On top of that, you still have to pay income tax on the full amount, $40,000, and not half of it only.
According to statistics provided by the Ministry of Finance, there are about 387,000 SRS account holders in Singapore as of December 2022. So in total, there is about $16.3 billion in the SRS accounts collectively as of December 2022. So in terms of demographic, about 31% of SRS account holders are actually between the age of 18 to 35, 27% are between the age of 36 to 45, 24% are between the age of 46 to 55, and about 19% of people are about at the age of 56 and above. So Alex, just want to ask you, do you see a similar age profile from the SRS clients that you engage with?
Yeah, it's a good question. It's an interesting statistic, isn't it? And when you break it down, we probably see something broadly similar across our client base. Taking a slightly broader view, we find that SRS attracts quite a diverse range of clients across different backgrounds and different ages. So whilst it's never too late to boost your retirement savings in your 40s or even in your 50s, there are significant advantages to starting young. So we're seeing a growing number of clients in their 20s and their 30s who are taking this step. Specifically, SRS will benefit middle and high income earners who can lock in away funds for the future, and they will enjoy the immediate tax benefits. So let me give you an example. Locals, including PRs, can contribute up to $15,300 a year to their SRS, and this contribution will reduce your taxable income. So for a Singaporean or a PR earning $100,000 annually, you can see their taxable income reduced to around $84,700, which translates to a total tax saving at the end of the year of just over $1,750. Which is the equivalent of a new TV or a holiday at the end of the year. As you move up the tax brackets, the savings in absolute terms increase. So somebody earning $220,000 would see a reduction to their tax bill of close to $3,000. Secondly, we do see a lot of clients who are foreigners because the SRS offers a bit more flexibility. They can contribute up to $35,700 per year. So this allows expats with higher salaries to save more for retirement and enjoy potentially larger tax reductions as well.
I think one of the interesting points as well why younger people might want to start their SRS accounts is because you lock in your statutory retirement age at the point of contribution. So it doesn't matter how old you are, it matters how old you are when you make your first contribution.
So saving money on income tax is obviously a good start, but it's not good enough. So unlike our CPF savings, our SRS savings only earn us an interest rate of a nominal interest rate of 0.05%, which isn't even enough to cover inflation. So Wei Ting, I just want to ask you, what can account holder do to better deploy their SRS savings?
Yeah, so while you can actually save taxes by opening an SRS account and contributing voluntarily, we need to remember that SRS funds don't earn returns automatically like CPF savings do. If you look at Singapore's inflation over the past 30 years, it has actually been steadily increasing, averaging around 1.4 to 2.1% annually. And if you look at the last 2 years, it has actually spiked to as high as 4.8%. So if you actually don't take any action to invest your SRS funds, your money will actually lose value over time and your tax savings will not mean much. That's why it's highly recommended that SRS account holders invest your funds as soon as you make your SRS contributions. And in fact, there are actually plenty of options for you to invest your SRS funds in. You can choose from stocks, ETFs, REITs, bonds, and money market instruments. And of course, each of these asset classes, right, carries different risks and returns. Imagine for Singaporeans, right, if you actually start contributing at the maximum limit of $15,300 from the age of 35, if you compound it at an annual rate of 5%, you would be able to save close to $1 million by the time you make your first withdrawal at the statutory retirement age. And this is, of course, on top of the tax savings that you can enjoy.
Yeah, so according to MOF statistics, about 21% of SRS savings are uninvested. This is as of December 2022. So Alex, I'm just wondering, can you explain some of the common reasons why an SRS account holder might be actually hesitant or reluctant to invest their savings, even though they know they're not earning much interest if they leave it uninvested?
Yeah, again, it's quite a surprising statistic, really. In our experience, there's a number of reasons why it's the case. In some cases, it's a lack of knowledge or experience. You know, there's a fear of making losses, or in many cases, it's just plain old procrastination. You know, I'll get around to it tomorrow, and then you never do. The problem with that, of course, is that the more and more time that goes by, the cost of not being invested starts to stack up. And I think what clients often don't realize is that it doesn't have to be complicated or scary. So if you're not confident, you don't have the time, you can start just by contacting a trading rep. And they will demystify the whole process for you.
Wei Ting, I just want to ask you, what should SRS account holder think about besides the investment instrument they choose? So should they also be concerned about the risks that they're taking, or even the lack of investment knowledge? Because I'm sure that's one of the concerns people would have.
Investing can be scary if you're actually new and do not understand the products and risks involved. Investing requires some understanding of the market conditions and also frequent monitoring and rebalancing of your portfolio. So for new investors, right, it's recommended to think about these three points. Firstly, start with understanding your own investment objectives. You need to ask yourself, what kind of returns are you actually looking for? Next, do consider a risk appetite. Are you actually comfortable with the possibility of losing your investment value? And finally, also think about the time that you have to monitor your portfolio. If you actually have less time, you're a busy person, you might want to consider more passive investment instruments or strategy, such as investing in ETFs.
So Wei Ting, how can a brokerage platform like Maybank Securities actually help an SRS account holder get the most out of their savings?
Thanks to technology, trading is nowadays very, very accessible. However, I think that it is still important for you to maintain a good relationship with your broker, as it can be extremely beneficial. Brokers help you to navigate the complexities of the financial markets. Whether you actually need a quick summary of market conditions, an explanation of the suitability of certain products or investment strategies, or even to understand the implications, the complications of company announcements, corporate actions, etc., we are actually here to assist you. So it's not just about investing in SGX listed stocks. Having an account with Maybank Securities, our trading platform actually allows you to trade in international markets as well, such as the US, China, Hong Kong, and with all these markets, right, it actually opens a whole world of opportunities and risks.
It's also worth reminding people that there are fees and charges involved, so you should always check before investing, which is another reason to make sure that you've got a broker on hand who you can get in touch with. You know, typically there will be just a one-off commission charge when you're buying or selling something like shares, but you know, there may be other things to check. For example, it might be important to understand expense ratios if you're going to consider ETFs.
You know, I think one misperception as well is that you have to invest with the bank that you open an SRS account with. That's not really true. You can invest quite flexibly with a wide range of investment options that you guys have already said.
Yeah, I just want to add, because a lot of times when we top up our SRS account, we have to do it through a custodian bank. But I think what Dinesh is referring to is that you don't have to invest necessarily through the custodian bank. A big thank you to Dinesh, Alex and Wei Ting for sharing your insights with us on how workers in Singapore can fully maximize their SRS savings for retirement. For those of you who are watching, we hope today's discussion has shed some light on the crucial role SRS can play in your retirement planning and inspire you to take some proactive steps towards maximizing your retirement savings.